Hello, welcome back. As I was looking through the current trends in the stock market, I bumped into Digital World Acquisition Corp. And it looks like there is a little bit of an uptrend here, and people are looking to potentially purchase this specific ticker symbol. And I wanted to talk a little bit about it and what it is, because many people may not even be aware what this company is about. And Digital World Acquisition is a SPAC. It's a special purpose acquisition company, as it's what the abbreviation means, really. But what is that? Now, in order to explain that, I first wanted to take a look at and try to take a look, really, at the income statement of this company. And so you'll see here that there is nothing. There's no income statement, there is no balance sheet, there's no cash flow, there's just errors coming up. And so let me just go back to the overview. There is still an overview, there is still a ticker, a symbol basically, and a stock that you can trade. So what is this? Now a SPAC, a special purpose acquisition company, is basically a shell company, and by that it means that is a company that is acting as an intermediate. It's acting as an intermediate for what reason, you may be asking. The reason is that this company's aim is to actually purchase another private company and take it public, make it an IPO. And so normally for a company to become an IPO, they have to go under severe scrutiny, and they need to be examined for what they are making. There is a lot of different things that they have to comply with. There's a lot of scrutiny happening there actually. So SPACs try to make this process a little bit easier for the private company and also provide some better value for the private company owners. And so typically they tend to provide a higher return for selling a company if you are the owner of a private company than actually selling it to another company that acquires you. Typically, when you take it through a SPAC, you tend to make more, and the gains tend to be higher because it's going public, and so it becomes there's a lot more capital that can be added to the company, that can be invested in the company that's going to be acquired. And so the way this works is a company is formed and is selling some stock initially and has some sponsors and investors, and the initial sponsors tend to be making the most money out of this deal. But what happens is this is basically a blank check company, as it's called. So you're basically giving your money up front and waiting for the company to acquire another private company to take it public. And you don't even know which kind of company that is. You're basically relying on management. And the reason why this is enticing and potentially very, very interesting and attractive to investors is that they can enter a pre-IPO sort of in a very, very nice stock price. And so if the companies that the private IPO, the SPAC acquires is a good company and makes a lot of money and investors love it, then the initial investors, the pre-IPO sort of investors, they make a lot of money out of this. And so this is why it's attractive for new investors. It's basically the unknown element and the element of the pre-IPO idea here. Because when an IPO happens, the stock tends to be a little bit overpriced compared to what it was before, actually, and potentially even way overpriced compared to what it was when the company was private. There's a higher multiple, much, much higher. So this is the nice part about investors wanting to get into the potential SPAC and take advantage of the pre-IPO sort of process. And for the company itself, it's actually also even easier to become a public company because again, there's not much scrutiny. There is scrutiny, but not as much as a public IPO, a normal IPO. And so it's sort of like a win-win situation in this case. Now the thing is, you have to be careful when you're buying something of that sort, because initially it's a blank check for you. You don't even know which kind of company the SPAC will acquire, and de-SPAC as we're saying. And the way to have a better idea of what's happening is to actually examine the team, the executive team, and the team behind the SPAC, and get an idea of the consensus if you really want to to get into studying the actual consensus of the SPAC. That's going to be also useful to you as well. And you have to bear in mind that this kind of lower scrutiny could potentially be a little bit of a higher risk for you. And also, the fact that you don't even have an idea of what company is behind the SPAC can also be a little bit daunting, and understandably, because you don't really know what kind of merger, if you can call that a merger, is going to happen when the SPAC actually de-SPACs and acquires the target company. Typically, this tends to happen within a 2-year period. And if that doesn't happen in that 2-year period, the SPAC owners tend to get their money back. And so in the case of DWAC, DWAC, we can take a look here at this article that I discovered about DWAC, and Digital World Acquisition Corp is, as I mentioned, a special purpose acquisition company that entered into a merger deal with Donald Trump's social media company TMTG. And so before considering an investment in DWAC, it's important to understand the TMTG business model and how SPACs work. And this is what I examined earlier. You have a SPAC here, which is merging with TMTG in this case, and this is basically the company that you're buying, practically speaking. And so if you now go back to our trusty tool over here and search for TMTG, you won't find it because it's not there. It's a private company that's using this shell company to be taken publicly. So this is the idea here. And so one of the problems that could arise from that is that you don't have a lot of visibility on what's happening behind the actual private company, and that can be a little bit of an issue here. But you will see here that October 20, a press release announced the proposed merger of DWAC with Trump's Media Social Security Technology Group, and so this is what you have here, and it looks like the market reaction resulted in a closing price of 45%, which generated a daily gain of more than 350%. Not bad, but we'll see whether the merger will take place and all that. But you will see here that the DWAC, as I mentioned earlier, has no business operations, and the whole purpose is to raise capital. That's what it is. It raises capital and uses that capital to acquire another company, another private company. That's it. And you can find some more information here about the specific SPAC, which is using TMTG. It's going to probably de-SPAC with this company. And if you want, you can take a look at some overview over here, which the TMTG's initial growth will be funded with DWAC's cash held, as I mentioned earlier, in a trust account of 293 million, which is the investors' money basically. And so this is what's happening with DWAC right now. And I wanted to make this video just to let you know, because many of you could be buying this just because you are seeing that it's up, and you may not even know, and it's actually insanely up. Look at that, 3 months, like 700%. That's insane. But it's important to understand what you're buying and know what this is. This is not really a company. It's basically a proxy to a company, and you're actually effectively buying a private company, TMTG. So thanks for watching. Hope you enjoyed the video, and if you did, please leave it a like. That helps a lot. And subscribe, because that also helps a lot, and potentially it will help you, I hope. So thanks for watching, and I'll see you in the next video. Bye bye.